Yo, Ramadan day two of our little Ramadan 30-day boot camp, and teaching you all how to day trade. This is going to be up for a very, very, very long time, so whenever anyone sees it, I just kind of want to teach y'all what to do. And as you guys can see, what are we doing today? Daily bias. That's step one. That is probably one of the biggest steps of day trading. And what have I written down? Find out how market is moving and do not trade against that ever. Okay? If you we are all about high confluence, high probability trades. Now, if you're trading against your daily bias, you are trading against how market is moving that day. Do you guys understand how much that lowers your probability, right? So let's just get straight into it. Let's teach y'all how to do this. Okay. So I'm on some EU right now, Euro versus USD. Okay. We're going to start off. I'm going to show you guys how we check weekly biases. Okay. We can probably remove that. Guys, write this down. Find out how market is moving and do not trade against that. And then make notes of what I'm saying as long as you're going along with it to make sure you're understanding what I'm trying to teach you guys. Okay. Okay. Day one, daily bias. Okay. So on the weekly, what are we seeing? We're seeing that Euro USD is bearish, right? But right here, I'm trying to show you guys what we were looking at today. So we can see that the market is bearish. Now, if we go into our daily time frame right now, right? And we can also see that market is still bearish. Remember yesterday we were talking about break of structure? Okay. So what are some key things that we're looking at? Okay, so we can see here, right here, the market broke structure to the upside. Okay, right here. Okay, and then we can see that it later broke structure to the downside right here, right? As soon as this candle closure, right, was below here, because this is your newest candle. So I don't know if you guys. We're gonna go at it like one trade, one candlestick at a time from here. Okay, from the week of the daily of 27th Jan. Okay, so on the 27th of Jan, it's pretty easy to tell the market is moving up. Now, when we had a daily bias, we can see that there hasn't been a break of structure, so we still follow the principle that market is moving up. Okay? Then a green candle forms, the market was moving up, right? So this is our new holding point right here. This candle doesn't dictate when the break of structure happens anymore. This candle dictates when the break of structure is going to take place. So we have this candlestick. Now we see that structure was broken downwards. Now, since we're already in a downtrend, we just keep going down. Now, was this candle closure above this candle? And the answer is no. So that shows that we are still in a downtrend. Okay, now a new candle formed. Now this is where a green candle has to pass for structure to be broken. But the next day on the 5th of February, you can tell that structure kept going down. So we had another down candle. So we were still in a downtrend. Now going to the green candle here, we can see that the green candle closed above the red candle. So what does that tell us? That right now, this has broken structure upwards. Okay, now this green candle is just confirmation that this is the new benchmark for where structure needs to be broken. Now we go through all this and structure was never broken. Over here we come, all right, another green candle. Now this is the benchmark, and right away structure is broken and we are going on a downtrend. Now, this is literally the most kindergarten way I can explain break of structure. Okay? You have a candlestick. You just have, if it's a green candle, you have to wait until it closes above the red candle. And if you have a red candle, right? If you have a red candle, you have to wait for the green candle to close above the red candle. And if you have a green candle, you have to wait for the red candle to close below the green candle. And that is how a break of structure takes place. All right? And your newest candlestick is where your break of structure is being dictated from. Previous candles do not matter once a new candle is formed. You look at the last completed candle. You don't look at the previous candle and you don't look at the candle that's forming. You look in the candle in the middle, the last completed candle. All right. Now that we have that clear of what a break of structure is, now we can tell why. Something else I really actually want to gloss over real quickly with you guys is you guys will see that in certain days that there is green candles popping up, and you'll say, okay, if I was to take a sell trade on that day, how am I going to make any money being able to create a confluence and create and be in the market to make a sell trade when market's moving up? That's when you don't trade that. Now, this is why we're going through daily bias right now. I want you guys to keep in mind right now, okay? Right now, we're in a downtrend, okay? Now, you will see in the weekly, we were in a downtrend. I'm going to show you guys one more time. We were in a downtrend on the weekly, all right? So remove these drawings. We were a downtrend on the weekly. We were on a downtrend on the daily. Now, we're looking for a confluence of downtrends on the 4-hourly. Now, I want structure to be downward for me to take a trade. All right? Right here, 4 a.m. CMC 21. Yeah. You guys can see that at 4 o'clock, but most of the day in the market, we were moving up. So, what does that tell us of our daily bias? That when we go down to the 1 hour, okay, 8 a.m., okay? On the weekly, we're in a downtrend. On the daily, we're in a downtrend. On the 4-hourly, we're on a downtrend. I'm not going to teach you guys the complete strategy right now. I'm teaching you guys how to read trends. All right? I'm teaching you guys how to read daily biases. It's very simple. You can see that when we go to the 1 hour, depending on what time you go in, you can see that structure was broken to the upside. Then you can see structure was broken to the downside. Then, not to get ahead of myself, but then you can see structure was broken again to the upside and structure was broken to the downside, right? So do you guys see how you need a high confluence when you're trading, that your weekly needs to be in line with your bias, your daily needs to be aligned with your bias, your 4-hourly needs to be aligned with your bias, and then your 1-hourly needs to be aligned? Because in 1-hourly, what you can do is you're looking for entry points, right? So you need to make sure market is moving down at that time, and I'm going to teach you guys all those tricks of the market. But first thing, the most important thing I need you guys to go do when you're watching this is go open up anything you trade and just tell me, where is market moving at that time? So if we go, not Euro USD anymore, but Forex GU, okay? Here we're on GU. We're gonna go to the weekly time frame of GU. We're gonna start from right here, okay? The week of the 19th of January. We can see the market moved up and broke structure here to the upside in that week. Market moved up, all right, on the Monday 26th. So we were in an uptrend at this time. And then on February 2nd, we started our downtrend because we had a full closure below this, right? A full closure below this candle. This candlestick is below this candlestick. There's a closure. Now, we can go see here that this green candle never closed above this red candle. So what does that tell us? That we are still in a downtrend. Now, if we go to the daily, does this also give us confluence to what our weekly bias is? Now, on the daily, let's start from February the 5th. No. When did this week start? I want to make sure that we're doing this. 16th Feb, okay? 16th Feb on the daily. Okay, 16th Feb, that we can see that it never closed. On the 13th, market closed bullish. So 16th Feb, market was still bullish. Then here we see on the 17th of Feb, market was bearish. This is where it broke structure, guys, right here. Nothing fancy. Right here is where market broke structure. On the 17th of Feb to continue on a downtrend. All right. Now, if you were trading on the 13th, right, or on the 16th, then that I just you're stupid. Okay, I'm not even talking to you. Like, we're learning, but this is the important things about it. Okay, on the 13th of Feb, you're bullish with an entire bearish trend following, right? And you're on the 16th, you haven't broken structure yet. So why are you taking that trade? You need to break structure before you can take a trade. But it also depends on what the 4 hourly is saying. Now, this is the important thing about day trading is you need to be able to read the chart very well. Okay? So over here, we're on the 12th of Feb, but we're looking at the week of the 16th, right? Friday, you guys can see market moved up. This was where our trend was set. Market broke structure to the upside and continuously broke structure to the upside. But then market on the 15th, starting at Asian session time, started breaking structure to the downside. And it was still during Asian session, market started moving to the downside all for the next 2 days. Market never rose. You can see if market's pushing up, then that means my daily bias is not aligned with my my 4 hourly bias is not aligned with my daily bias. Do you guys see how price is pushing up here? Right? Price is pushing up. Price is pushing up. Okay? We haven't broken structure yet, but price is pushing up. Now you have to look at the 1 hour. Are we breaking structure in the 1 hour when these trades are happening? Right? Here we look at that 18th. That's where it was. We broke structure to the upside. So on that day, our daily biases are not in confluence. So you should not be trading GU that day, right? Same thing, you follow it down, structure, broken structure. Oh, now it's all aligning. Now is a good day for me to trade GU. Do you it's that simple. Your one thing right now is when you guys are watching this, all we need to see is when you're looking at the confluences of the daily bias, you need to understand, was that a good day for me to trade that currency? Yes or no? Or whatever index or whatever gold, silver, whatever you trade, was that a good day for me to trade? We're going to look at, let's see, the 19th The 19th got fixed later on. So you could have traded on the 19th. If this was where your trade was, if you were starting your trade, the 19th was like yesterday. I want to look at this. New York session. All right. We're going to look at New York session time on the 17th. Okay. Is that a good time for me to trade? So we're going to go to the daily. 17th of Feb. 17th of Feb. Okay. On the daily, we can see the market moved right here. This is 16th to 17th. Market moved down right here. Okay. I'm going to show you guys how to do it one time. Okay. So we broke structure right here. Okay. Where market was pushing down. Then we go to the 4-hourly. Okay. And we can see that it's in line with our bias, that we are in a downtrend still, okay? Because structure has not been broken upwards. We go to the hourly, okay? 17th, okay? Am I going to be trading when the candlesticks are moving up, or am I going to be trading when the candlesticks are moving down? I'm going to be trading when the candlesticks are moving down. So right now, we go to the hourly. We're at the 9 o'clock New York session time. Okay, New York session time here starts at 8 a.m. Okay. That's our New York session time. Okay. Now, let's say that I'm looking for a high confluence trade at this time. I see that there's an order block right here. Again, no, I'm not gonna show you how I take the trade. I'm just going to show you guys right now what daily bias is, okay? So, market is moving down. New York session time starts. If I can see, okay, right now for me is a good time to take this trade because I'm in a downtrend. Okay, if you catch it right at, like, if your entry point was, let's say, here at 135 and your exit point was at 134, right? This isn't like a lot, but it's a confluence trade, right? But as soon as you see structure being broken, and you're looking for structure being broken more ways than just this, but you're out of that trade, right? But what I'm trying to show you guys right now is see how how market is coming down. So we had confluence on the daily, we had confluence on the weekly, right? We had confluence on the 4-hourly, but then we didn't have confluence on the hourly. If you look for most of the New York session time, we broke structure to the upside. Of course, if you go to shorter time frames, you'll be able to see during when that how that structure was broken, right? Exactly when that structure was broken. Structure was officially broken right here. You can see that structure was broken right here, and then after that, structure was broken again here, and then it was broken again here. So at 9, if you weren't out of the trade by 9:45, you were gonna lose. You're gonna lose a decent amount, right? All of a sudden now you're starting to lose money rather than make money if you're on a sell trade, if you're not going with your confluences, your daily confluences. But these are the things I'm trying to teach you. You guys need to go to whatever index you want to trade, go to whatever time frame you want to look at, but I want you to mark out a day, and I want you to see in that day was my confluences according to if I was going to short a trade or if I was going to long a trade. Was I bullish or was I bearish? That is your homework for today. And yeah, I hope it makes sense. If there's any questions at any point, guys, just leave comments. We'll always have a discussion about this stuff. And yeah, Ramadan day 2 went good, alhamdulillah. Good fast. And I'm gonna post a psychology video tomorrow, and we'll have a little discussion about the importance of why we're doing this. All right, guys, take care. And yeah, let's go get that bread.